Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. As promised, the management of IRB Infra is with us. In fact, they attended an investor meet yesterday where they expressed confidence that the momentum of NHAI orders would continue into the second half of the year. Anil Yadav, who's the Group CFO of IRB Infra, is with us to talk about that. Mr. Yadav, good morning. I'm going to ask you about the orders in a bit, but before that, can you tell us, because of the trucker strike that was there last month, as well as the Maratha Morcha, has there been any loss of revenues at all for you? And will the government sort of make good the loss in revenues?
Yeah, any such kind of issue which is basically for more than 7 days, there is a provision in the concession agreement for the compensating those losses. In fact, when this trucker strike was going on, that time the traffic has reduced. But as now this festive season has started in India, about to start in India, we have seen good uptake in the traffic numbers in recent weeks.
Okay, but trucker strike was more than 7 days. Does it entitle you to compensation?
Yeah, Lata. That was for, I think, 8 or 9 days. So that entitles for the compensation for our concession.
So generally, what is the traffic growth for, say, what is that now? It's 5 months year to date?
Normally, they take basically previous month, what they did in the demonetization. They have taken a previous month number, and on that basis, they have compensated. If suppose your revenue is X, and now it's X minus something, so whatever the minus is there, that will get compensated.
Fair enough. No. What I'm asking you is a more general question. How has traffic growth been in the roads where you collect toll? If you compare the 5 months of this year with the 5 months of last year, year on year, what has been the growth?
First 3 months was not that great because of the early arrival of the monsoon, and monsoon was very heavy. That has led to the flooding and some other issues also. So the traffic growth was in range of 3-4% only. But now from the August onwards, we have started seeing around 8 to 10% kind of traffic growth. And if that momentum continues, on a yearly basis, I think we will see a traffic growth of roughly 6 to 7%, which is even better than what we have estimated at the beginning of the year.
Okay, so 6 to 7% traffic growth is what you're looking at. Can you tell us a little bit about the awarding momentum from the NHAI? What can you bag in terms of additional orders over the next, say, 12 to 18 months?
I think whatever the awarding activity will happen, basically that will happen by December or January before the code of conduct is in place. And we are expecting it will be a similar kind of run rate what NHAI has awarded last year. It was close to 7,000 kilometers. And out of that, we have bagged probably an order book of roughly close to total 9,000 crores. And this year also we are expecting around 8 to 9,000 crores of order book from the NHAI.
Okay. How many will complete financial closure, you think, extra this year?
Yeah, we are on advanced stage on the 3 HAM project, whatever the 3 HAM project we are having for the financial closure. And we will be achieving the financial closure for all 3 in this quarter itself. That will be well ahead of the schedule.
Okay, so this 10,000 crores of revenues that you're expecting in FY20, at least this is what you told us when we spoke to you last month. Would you have a reason to scale up this guidance based on the orders that you've won?
See, this 10,000 crores of revenue is based on whatever the order we have bagged. This order was bagged in the last year itself. And this was 10,000 crores was on the backdrop of that particular order. If we get more, then definitely that revenue will grow up. In whatever we will get in this financial year, that will be definitely get executed. Some part will get executed in FY20. So then definitely, depending upon the timing of the win, it will basically, some part will get converted in the revenue.
Okay. Do you think the NHAI momentum will continue, or will the onset of elections slow down administrative activity?
See, normally in past, whenever the elections are there, they try to complete the target well before code of conduct. So I think in the back end of the second quarter and the third quarter will be totally a busy season for the NHAI as far as award is concerned.
Okay.
So I think they should be able to achieve their target by the third quarter.
Would you raise any funds for any of your requirements in terms of construction activity? I understand you have a requirement of around 2,600 odd crores over the next 2 years. Will most of that come from internal accruals, or are we looking at some fundraising as well?
See, we have roughly 1,500 cash available on books, and plus as on June, and plus we generate roughly 15 to 1,600 crores of cash accrual post payment of the interest and taxes. And considering this accrual, we are well hedged as far as our equity requirement is concerned, which is required over the period of 3 years. In terms of the new award activity, also whatever the HAM we will get there, the equity required is 40% we get from the NHAI, and equity requirement is hardly 15%. For that growth also, we are well capitalized as far as internal approvals are concerned. But in terms of the, there are 3 TOT projects which is about to come from the NHAI, and couple of the state TOT may also come. So considering this TOT opportunity, and there also you are required to make an upfront payment, and each project will be more than $1 billion kind of size. So there you require roughly 2,000 to 2,500 crores of equity. And even if you bid for, we normally bid for in the joint venture. Last time we have bidded along with the Atlancia, and in future also we would like to continue the same. Even as our share also will come roughly 1,250 crores.
Okay.
So that will be a chunky requirement, for we have already gone for the shareholders' approval for raising the money up to 1,500 crores.
All right. Oh, that's a detailed explanation. Thank you very much, Mr. Yadav, for joining us and giving us some sense of the impact of the truckers' strike and what may be NHAI's ordering or bidding timetable. No, not much of a difference expected because of elections. Maybe more hectic ordering activity ahead of the code of conduct kicking in. The markets at this point in time are continuing to see profit taking. But it's not a whole lot. It's a 0.25% knocked off on the Sensex and the Nifty, but that's how it's been from the word go. So it's not a further sell-off, but clearly the dip is not getting bought, and you'll have to watch out for that. Always watch out for these things, especially ahead of a weekend. Well, let's shift focus now back to corporate earnings. And as we told you, Liberty Shoes is on our radar. The stock has gained post its Q1 numbers. The top line rose by 20% in the first quarter, and the profit almost doubled. That's also, of course, a low base effect. But margins have remained largely flat. EBITDA up 16%. Adesh Gupta, CEO of Liberty Shoes, joins us now. Good morning, Mr. Gupta. Thanks much. If you can tell us what the revenue growth is likely to look. Now we are, about 2 months into the second quarter as well. Is it looking like growth is picking up, or is it largely low base effect?
First of all, good morning, Lata. Thank you for calling me to this channel. What we have seen in first quarter, there has been a good growth for us, particularly in the domestic market as well as in the export market also. In the domestic market, we see a good traction, in our stores, which is, the COCO model stores. And going forward also, as we are landing into quarter 2, of course, there is some kind of subdued demand because of the consumer, let's say, confidence. But I think now as the clarity is much more there from GST rate reductions, as well as I think the consumer spend is increasing now. I feel quarter 2 should be good as well. Of course, we do not expect, a very bumper growth, but I think compared to quarter 2, we should also grow in double digit. Besides that, the exports, which was downsliding to 30-35% last year, we see some, growth also in that, and we might be able to restore back to our, 2016-17 numbers. So which means that, cumulatively, we should expect, double-digit growth in quarter 2 as well. But I think we are very bullish in quarter 3 because recently the reduction of GST on, from 1,000 rupees price point that should also spur some demand, in that price point, where the revenue is close to about 20% of the company. So I see, going forward in the peak season or in the healthy season, we should expect a good demand.
When you're referring to double digit, you're referring to revenue, right?
Correct.
What is the volume growth in the first 5 months of FY19?
What we have seen in terms of numbers, we have almost sold 3.5 lakh pair more in Q1, which is about 14%.
Okay.
And I think this similar trend should continue, because not only the value, even volumes are also growing, which is a good sign for the company, because then the EBITDA margins can also improve.
Sure.
And also the bottom line will also improve significantly.
Okay. How has the response been to your new brand Healers? What kind of revenue growth have you seen from there? And in fact, your own brands, how much do they account for currently as a percentage of total sales?
See, this year, we expect that the Healer has gone a good traction, amongst the millennial consumers, or also the people who look for innovation. So in ladies particularly, we see between price point of 2,999 and 3,999, there is a good traction of this brand, besides also in the men's category. But women category is definitely, showing far better than expectation. And we expect that from in this calendar year or this financial year, we should expect about 30 crores of revenue coming from Healers per se. So I think this brand is doing quite good actually, and it is exceeding the expectations from our side. And that means that we are meeting the expectation of the consumers or the customers in our stores.
Okay, no surprises, right? That higher percentage of sales coming in from women. I mean, that's, I guess, expected. But what about the average selling price? Has it changed a lot versus what it was last year? I mean, what does the average selling price stand at now?
Well, I think the average price, compared to my biggest competitor, we are far higher, compared to them. I would not like to name them, but our ISP is far higher. I think it is more than 350 rupees now on an average, because we sell, all price points. But average price increase is also happening.
Okay, it's not surprising that women are buying more. We like to put our best foot forward, don't we? Mr. Gupta, you said double-digit growth. Now, I just want to get some more guidance. Can we expect 20% revenue growth?
I think we should be in the range of 10 to 20%. Okay. As we still have 9 months to go, it's difficult to speculate. But I think it can be around 20% also.
Are there chances of margin expansion?
And also, the more important factor that, we have opened.
Yeah, I'm just coming to the store opening, but can margins also improve?
Sufficient capacity. Well, the margin has to improve, because what we are going through in the last quarter, you must have seen that we are doing it through a consolidation process. We have closed one plant because that plant was almost like, in the tax-free zone. And by closure of this plant, we will cut down our huge human resource cost, as well as also the consolidation of the capacity, which will give us a better margin, from the same plant which we are producing in Libertypuram. So we are doing a lot of, consolidation to see that, our expenses are under control or they are coming down. And going forward, even when our EBITDA margin has to improve, so we must improve on both sides, on the top side, on the expenditure side.
Okay. How many stores did you open in FY18, and how many in the first 5 months of this year?
Well, I would like to give you the numbers. In the store opening of let's say first quarter, we opened close to about 20 new stores, where the COCO model or the FOCO model, almost about 13, and 7 in the FOFO model. FOFO means franchisee owned, franchisee operated, and COCO and FOCO means that it's company owned. Oh, so we are, I think, hoping that in Q2 and Q3, going forward, we'll have the similar numbers of store opening, which will also give us a lot of top line growth.
Okay, all the best for that. Thanks so much for joining us. That's Liberty Shoes. Good numbers coming in. Actually, from one good company to another, it's been a good quarter for Plasti Blends as well. A growth of almost 20% in the revenues. The profits have doubled this time around. Operational metrics have seen a significant improvement. Satya Narayan Kabra, the Vice Chairman and MD of Plasti Blends, joins us now on the phone line. Mr. Kabra, good morning. Can you tell us what led to this kind of growth you've seen? I mean, this is the highest ever quarterly revenues. And can you also guide us to what the volume growth could be going ahead?
See, we had last year, 1 year, we had issues about the GST, and then before that demonetization. A lot of disturbance was there because of the GST, and practically there was no growth last year. But now we are, with the GST and e-way bill coming into operation, I am sure now things are coming online, and we should have growth which we were having earlier before.
So when you say earlier before, what kind of growth rates would you be looking at for the full year of FY19?
15 to 20%.
Okay. So I don't know what plastic blends actually means, but does the ban on plastic impact you?
No, absolutely not.
Okay.
Because we are not catering to that sector.
Okay.
Where the ban has come.
All right.
And as said, also that sector is only very 6 to 7% of the total plastic industry.
Okay. You said 15% growth is what you're looking at in FY19. What's the market share currently?
Market share about 10%.
Okay. And has it changed over the past few quarters? Have you gained or lost?
It's almost similar.
You've done very well on margins, actually. You know, a year ago, we believe it was 8.8 and now it is 12.5. That's a good improvement. Why could you do that?
No, because this is our normal range. We will always say 11 to 12%. It's been very normal.
Oh, right.
Last year, because of the GST coming into and the disturbances, we had to suffer something in our margins.
Okay, so if you can tell us, you know, there's a revenue of 21%, the growth of 21% in revenues. How much of it came from volume? How much did volume grow? How much could you push up prices?
No, almost I will say volume growth maybe only about 5%.
Oh, the rest is
but
price.
The major growth is coming that we have moved from low value products to high value products.
Okay.
Our average realization per kilo earlier was about 80 to 85 rupees, which is now come to between about 105 rupees per kilo.
Oh, okay. So realizations have gone up. Any new clients that you've added?
No, realization mainly because of the product mix.
Okay.
We are slowly moving from the low value product to high value product.
But is there more headroom for more high value products? Or there is?
Okay.
Yes.
Sure. Before we let you go, any new clients that you have added?
No, there is a continuity there. Of course, we are retaining the old clients. And at least I will say about 10% new clients we have been adding every quarter or so.
All right. We'll leave it at that. Thank you very much for joining us, Mr. Kabra, with all those details. We have to wind down on Bazaar with the note that the markets have dipped. They've not dipped a whole lot. It's not triggered a cascading short selling, but you could see some long unwinding if the dip is not bought. In particular, it's the Bank Nifty that you'll have to watch out for. It's a slightly underperforming sector